Hey everyone, welcome back to Corporate Decoder. Today we are diving into the latest report from International Income Portfolio, and let me tell you, it's a wild ride. We are talking about international finance here, so you might want to buckle up. It involves complex deals and financial instruments that'll send shivers down your spine. Almost as scary as forgetting to file your taxes. This isn't your average company. It's actually considered a registered management investment company. Basically, it's a fund that invests in different things to try and make money for its shareholders. This report covers the 6 months from November of 2024 to April of 2024 to April of 2024 to April of 2025. So that's what we'll be taking a look at. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for some awesome behind the scenes content and interactions with the team. Think of this report like a school report card, but instead of grades, we have financial numbers here. One of the things this report shows is what the fund invested in as of April 30, 2025. A large portion of their investments were in sovereign government bonds. Sovereign government bonds are basically loans to governments. A whopping 52.4% of their investments were in this area, so they are very heavily involved with trusting foreign powers to make good on their debts. They also put a lot of money in short-term investments. About 30% of their total investments were held in those, while a smaller but still considerable amount was in mortgage-related assets. Now, how much did it cost to run this fund for the last 6 months? Well, for every $10,000 invested, it cost around $48. Or another way to put it, you would be charged 0.4% of your investment as expenses to have this team manage your money, which is a bit less than 1% of your investment. Not nothing, but also pretty reasonable. Key fund statistics. Total net assets is all the stuff they own, all the cash and investments coming out to roughly $32.8 million. The fund also owns a lot of different assets. The amount of different holdings, including derivatives, add up to 502%, up to 502%. Up to 50 active, meaning they trade almost their entire portfolio each year. Let's take a look at their investments. The report outlines a lot of interesting figures, including percentages. One thing to note is most investments were in bonds with little investments in anything else. More than half were put in sovereign government bonds. The report highlights a few areas where the fund has a lot of foreign currency exposure. It appears that Europe and Japan make up a huge amount of the currency exposure for the fund. It's important to keep an eye on this, as this figure can dramatically impact the bottom line for the assets in the fund. Now, let's dive into the actual investments the company makes. We can scroll to the portfolio of investments section. The company invests in all kinds of interesting things, like collateralized mortgage obligations, foreign corporate bonds, and sovereign government bonds. They own a lot of different Argentinian treasury bonds, Brazilian treasury notes, and bonds from the Dominican Republic. They also own mortgage-backed securities from Fannie Mae, a uniform mortgage-backed security which settles sometime in the future, that is referred to as a TBA. They also own US Treasury bills, which are short-term debt obligations backed by the US government. These are generally considered to be very safe investments, so holding those gives the organization some stability and a fallback in hard times. They use purchased currency options. Basically, they are betting on the future price movements of currencies. The fund purchased a variety of what's called call options on the US dollar against put options of the Chinese yuan. Call options give the funds the right to buy those currencies at a certain price before a certain date, so they were betting that these international currencies would go in a direction such that it would be profitable for them to purchase the asset at the rate established. Think of it like a coupon. They also are selling written currency options. It is actually quite related to purchased options, but on the opposite side here, they are making a bet that certain currencies would not go up in value such that they could profit from the sales and collection of the cash from selling those options. They also engage in foreign currency exchange contracts, and what these do is allow them to buy one currency and sell another at a set rate on a certain date in the future. As a reminder, this is generally in the hope that that set rate will cause the organization to profit, based on research and their understanding of these international markets. They purchase currencies like Korean won, the Indonesian rupiah, or the Chilean peso, and they sell currencies like the US dollar in exchange. The firm also uses interest rate swaps, where they are betting on the future interest rates on currencies. What's crazy is that some of the interest swaps don't end until after 2050. So these are some serious long-term bets. In some cases, the fund receives floating rates and then pays fixed rates when the agreements are made. They are constantly trying to understand which way interest rates will go so they can profit off of the movements. This sort of stuff is what keeps finance people up at night. The company also deals with total return swaps. Basically, one party pays another based on the total return of an asset. The fund receives return on Peru bonds. Swaps are a great tool to trade without directly holding an asset. The organization also engages in what are called cross-currency swaps. Now, shifting forward, many of these debts and investments are impacted by the market or outside regulation. They also have significant investment holdings and activities, for which can make it difficult to understand and value how much money they can actually receive. Interestingly, the investment advisor fee is reduced to reflect the investment in the liquidity fund, which is less than 0.01% of the average daily net assets. The report includes many derivatives and notional contracts, things that are based on an underlying item. They all mean that the value of the investment is not the same as its physical worth. Lots of assets and money come from financial instruments. This is what we mean about what makes doing international finance so dicey. Let's do a quick overview of the company's finances. Net investment income came to just over $1 million, then netting out losses and changes and accounting for all investment moves. The net increase comes to just above $2 million. Looking into the future, at the beginning of the period, the company had about $31 million, and through all the turmoil came out with about 32.8 million, so overall did end up ahead. But there was still a huge amount of complicated dealings in bonds, derivatives, selling loans, and buying others. Many things that can affect the financial details of an investment company like this is their level 1 and 2 assets, where level 1 assets must be measured in the listed market. Level 2 can have adjustments. This means that in the event that numbers are hard to come by, that it can be difficult to actually give a value to any of their assets, which creates risks. Alt risks are voices associated with foreign investments. The organization also deals with foreign exchange risk, interest rate risk, and risks associated with government's economic data. These are significant factors that move up or down the amount of earnings they have. You will really need to understand the world to fully understand if they are doing a good job. Now, looking at these results more broadly, international income portfolio seems like a pretty risky investment, not because of mismanagement, but due to its reliance on external world events that happen on a global scale. Alright, that's our breakdown of International Income Portfolio's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.